Welcome back, everyone, to Cheddar Movers. I'm Chloe Aiello here in New York. The slowing of the Omicron surge is good for almost everyone, except perhaps vaccine makers. Shares of Pfizer, Moderna, and other vaccine makers falling off considerably in recent weeks. So what does the post-pandemic future look like for this particular sector? Joining us now is Stephen Gardner, director at ETF Managers Group, which is the issuer of the GERM ETF, giving investors access to vaccine stocks as well as testing stocks. Stephen, thank you so much for joining us today. Two of the more notable vaccine stocks, Moderna and BioNTech, are among your firm's 6 largest holdings in your GERM index. What moves is your firm considering as both stocks slid considerably yesterday?
Yeah, so I think over the last few months, there's been a huge slide to the downside with a lot of these names, with a kind of an excitement over getting out of this pandemic and away from these lockdowns and whatnot. But it's really been from a shift of this exuberance that we saw early on in the pandemic from a lot of these names going towards now what we're looking at as investors looking at more of the businesses and their ability to perform rather than just the hype of some of these high-flying vaccine names.
You know, it's not just those two stocks, it's the entire vaccine market. Last week, Dr. Fauci saying the U.S. is getting past the, quote, full-blown pandemic phase of COVID-19. So what should investors know when it comes to epidemics in the U.S. before they rush to sell their vaccine stocks?
Yeah, so there's a long history of epidemics and pandemics, 30 plus in the past 50 or so years. So there's certainly precedent for it, but this one hit us a lot harder, and there was obviously not a proper preparation for it, and it was a very reactionary measure, as to be expected. But I think we've learned from this substantially. So going forward, these vaccine makers have shown a great way to fight this pandemic and create proper remedies for it. And then on the treatment and the testing front too, there's been a supply-demand imbalance throughout the pandemic of testing companies. And I think, a lot of the U.S. names have really, risen to the occasion, but with the ebbs and flows of new variants, it's been difficult to gauge what proper inventories need to be.
Do you think that some vaccine stocks are more vulnerable than others, like Moderna, for example, which its only commercial product right now is its COVID vaccine?
Yeah, I think so. Companies like that who have their only commercial product in the market as COVID vaccine are more susceptible to ebbs and flows and volatility than the likes of Pfizer, who's got a long range of commercial drug products. But keep in mind, Moderna also has 15 clinical stage products that they're working on right now, and with how well capitalized they are, they do have a long runway to be able to push those through the FDA and hopefully get those to commercial levels.
And we know the biggest wave of Omicron is behind us, but in some places in New York City, for example, are still requiring vaccine proof. I actually went somewhere yesterday that required proof of a booster. So is this make vaccines worthy of holding in investors' portfolios? Are there any new vaccine news coming down the line that investors should be aware of?
I think overall, what we're going to see is that these vaccine names, in terms of the COVID, and the ones that are more pure play, just vaccination companies like the BioNTechs of the world and the Modernas, are going to hinge on the fact that they're going to need demand on a seasonal level, which is what we've been seeing as an expectation. Things are still up in the air on where we're going to go from here, but the expectation is that seasonally there might be a continual uptick in COVID cases, but at a less severe level. So, I think one thing about that is the COVID front. The vaccines are important, but a lot of these companies are using their mRNA technology, for example, and going and trying to use that for things like cancer treatment. Pfizer just bought Trillium, their immuno-oncology company with a lot of innovative products looking at treatment for cancer. So I think the mRNA is not a new phenomenon. It's been worked on for the past 15 to 20 years, and being able to use that technology outside of COVID into things like cancer, and BioNTech with a melanoma clinical trial drug. So there's a number of things that it can be used for. So it doesn't just hinge on this pandemic.
Absolutely. That does sound a little bit further down the line here. But in terms of short-term investing strategy, when you hear news like, these boosters are waning after a period of about 4 months, how does information like that inform your firm's short-term investing strategy?
So we're more long-term focused, diversified play, but I think in the short term, we always speak to investors about being able to, move through volatility, not necessarily going the single stock route, but also, diversifying in a basket within the ETF with our GERM ETF, which breaks up between these the treatment companies, and also the testing companies to play the entire infectious disease biopharma market. So short term, we could see, continuing move to the downside, but on the long term, we think there's, these companies are very innovative and they're going to continue to solve problems that create investor value.
You mentioned testing companies, and I know that the GERM ETF does have sizable investments in LabCorp and Quest, which do tend to be less contingent and reliant on the COVID-19 pandemic. Does your firm plan to adjust percentages of holdings in those companies moving forward?
So we're strictly a rules-based passive ETF. We're not making active decisions. It is just rebalance on a quarterly basis so that we're having diversified exposure to the entire market we're looking to access. So, the rebalancing is, bringing things back in line and making sure that, if, all boats rise in a rising tide, that all of these names, will go with it. But we're not making active decisions on, one testing company over the other. But we do have a pretty substantial percentage of testing companies within the portfolio.
Stephen, thank you so much for your time today. That's Stephen Gardner, Director at ETF Managers Group. Now let's bring Elise.